What's going on, everyone? My name is Nicholas Merton here at Data Dash, and today is October 14th of 2018. Well, folks, I hope you all are having a wonderful day today. Today, we don't have too much craziness going on in crypto traditional markets. It is the weekend, so not only are crypto markets a little more quiet, but also we are not currently trading equities. However, I want to spend some time to talk about prepping for the upcoming week in the next few days, as it's going to continue to be a very, very interesting market, with Bitcoin getting still even closer and narrow towards the end of its wedge with lower volume. It's a question of whether or not we're going to get a serious breakout to the upside or downside. And along with that as well, with traditional markets, with markets on edge from one of the worst weeks we've seen since back in February of this year, we have to ask whether or not markets are going to continue that downtrend, or as they have in the past, hold on some of the key indicators like the 200-day moving average. So we've got lots of things to talk about. Let's not push it off any longer and dive right into the update. So across the board on crypto markets at the moment, things are relatively neutral. We have a few players in the green, a few players in the red. For the most part, though, markets are holding quite nice as Bitcoin has increased a little bit. There's an interesting trend, as we'll talk about later on throughout the video, of a premium going on Bitfinex, so we're going to be talking about why that might be, but is it a cause for concern? Possibly, when we really factor in some of the three major probable reasons as to why this is happening. But taking out really the premium here, prices have been generally moving up over the past few hours for Bitcoin. And I'm going to skip the whole market cap, market dominant sector in regards to the analysis, because there just hasn't really been much change to it since we last talked. But going on here, again, we really have to focus in on the fact that we are still building within the wedge here, guys. I think it's fair to assume that, again, price is still coiling in here, that we're probably going to get a little bit of a leap up in price towards 6,500, and maybe even a little bit higher here on the Bitfinex pair, because again, there's a little bit of a premium here. But on some exchanges, you're getting generally around a $100 split, and this again is most likely caused by Tether. But either way, you're going to be seeing it probably bouncing between here, and by late October, we should be getting some kind of move. Now, we did get, as we were talking about on Twitter, if you guys follow me on Twitter, we talked about there being a big move about a little less than a week ago, and within about 24 to 48 hours, I was putting that out there on Twitter, and it ended up that it was a slight bit later, around like another 24-hour period, and we eventually got the big dip here from 66 down to 6,200. And the big thing I want to focus in on is that as we get closer and closer towards this wedge, guys, as the volume gets thinner here, we'll take a look at the weekly to really make it clear, we've started to go down to levels even lower than where we were back in July. This is signaling that traders and investors right now, I would say they're not losing interest, right? They're not losing interest in crypto markets, because traders really run around the clock 24/7, and they love crypto markets. They're still very volatile, still very easy to profit from, especially when other markets right now are selling off. So the thing that I want to emphasize here is that a lot of people are waiting. They're waiting for the trend. They're waiting for a breakout to the upside or to the downside. And a lot of money is trading on leveraged exchanges. We have to understand the environment at the moment. So we're not going to see a lot of liquidity on exchanges. It doesn't mean that crypto is dead. It just means that there's not too much growth coming in to fiat pairings with cryptocurrencies, meaning new investors coming in. For the most part, it's people trading the base market, and a lot of people who are trading on BitMEX but are pushing around the price of the actual normal paper trading market in regards to trading with fiat currencies. So again, keep watching this, see what happens. We have to wait for a break on the wedge one way or the other. If it breaks to the upside, it's a matter of breaking past the moving averages, and once you get above the 200-day, which is getting to a much more reasonable level, back towards really the highs we saw over here, if it's the case that we can get above that, the trend is going to be much more clear in that case. We're going to be seeing most likely a very nice short-term uptrend, at least in crypto markets. So I want to go on here, just look through a few key players. We'll take a look at ETH, USD, as well as the Bitcoin pair. Ether has been holding quite nice, as with Bitcoin, as Bitcoin has over the past few days. And it's a matter of picking up really direction here over the next few hours. Again, just trailing sideways like Bitcoin, guys. There's not too much to talk about. I will tell you all, I'll be fair. I have a good belief that if Bitcoin doesn't pick up over the next day or two, that not only Bitcoin is going to probably revisit 6,000, but that along with that as well, we'd see Ethereum come back down towards the lows on September 12th and maybe form a double bottom. And that might be good for the second largest cryptocurrency on the market. It might be essential for Ethereum to do something like that. If we take a look at the Bitcoin comparative as well, generally the same story here, guys. Well above those lows here back in September. So, again, not too far away though to where we could easily, see another 10% drop in the market and come back down to those lows. So it's a matter of patience. It's a matter about waiting for direction before we make any serious trades, before you're using any serious kinds of leverage, for those of you out there on BitMEX and all the different, different broker platforms that offer different types of leverage. So anyways, it's the general trend of the market right now. Not too much going on. I'll go ahead and talk about XRP. As you all know, I told you guys my personal feelings on this after the Swell conference on October 1st. There just isn't the momentum for this to continue, guys. We've seen historically, and I'll go ahead and I'll pull it up here on Bittrex so you can get the full span of relative price information. Every single time this needs to get above and hold above the moving averages. We had that chance, and Swell was not enough to carry this. So unless we get into a full swing altcoin market, at the moment, I really see this coming back down to its lows. And not only that, it could possibly be going a little bit lower if it can't hold that level over a good, decent time period in this bear market. Again, it really depends on the direction of Bitcoin. But yeah, I'm not honestly feeling quite well on this, because as much as it gained some support here at the 50 and 100 day, it got rejected at the 200 day here. So it's a matter of getting back above there, right? I'm not going to be bearish on it. I'm not making any trades. I'm not shorting Ripple by any means. I'm just waiting patiently on doing anything on XRP, okay? So again, I'm a trader in that case. I wait for the right place before I, go all in on anything. All right. So let's go ahead and talk about this. What's causing the relative 2% premium on Bitfinex? In arbitrage markets, 2% is actually quite nice, and I think people were losing their minds at the potential. I guess we really couldn't do much arbitrage with it because they had some regulations in place, but a lot of people were just flabbergasted by the the difference in price between South Korean exchanges back in 2017 of last year comparative to US exchanges. And this is really the biggest premium we've seen in a while. So a lot of people are curious as to what's really causing it. Well, Joseph Young, the well-known individual who works, I think he works over at CoinDesk, has definitely put out a nice piece that's getting posted everywhere. And he really put out three different reasons why this might be happening. That traders are moving to audited or regulated alternatives like Gemini USD and PAX. I got to be fair with you all. I think this that there's not enough, I guess in a sense, unless there's something to be genuinely fearful of. For example, I think a lot of people are concerned as of recent that I think there was a banking partner with Bitfinex that supposedly it was like a rumor partner, like people are not 100% sure if it was a partner, and then they supposedly went bankrupt, and now you've got the concerns with HSBC. There's a lot of underlying concerns with Tether for those who really do care about the fundamentals, and the hopes that there is a one-to-one pairing with Tether. So that could be causing that. I just don't see the liquidity moving over to Gemini USD and True USD as much as I like those, as much as I like the audited and regulated paired currencies in that case, or pegged currencies, but I just don't see it just yet. It's traders selling USD Tether to purchase cryptocurrencies. I don't really see that right now. I think more than anything, seeing as there is direct fiat pairs to USD Tether, seeing as there's direct pairs to obviously Bitcoin, but also other pegged currencies or audited or regulated currencies, that people are moving out of Tether as a whole due to the banking services concerns tied to Tether LLC. So I think the third reason more than anything is most likely, but we don't have any true facts pointing towards any direction right now. We just don't have any assurance at the moment. But this is a $2 billion issue at the moment, guys. If things go wrong, if Tether does collapse, there is $2 billion of supposedly pegged currency out there that may not have a backing at all, that might have underlying issues in regards to the banking services that are helping to provide that peg. So we have to, again, be cautious, be a little bit on edge in a sense. But I will advise people that, again, as much as I don't mean to say it's never happened before, it can't happen, that as of now, there's been a lot of fear over the past year in tether markets, and they continue to do just fine. And I really have an odd theory, and I'll tell you guys why I believe this. I have an odd theory that even if tomorrow that Tether Limited or Bitfinex came out and they had to state it, or they just decided to state it, that there's no pegged currency in regards to dollars for the Tether that are out there, that the price would even make any significant move in the long term, right? Because I think when you get a serious enough distance from the mean, right now we're around like 98 cents per tether compared to $1. If it really gets to a ridiculous amount, the arbitrage bots are going to come in and pick it up, and they're going to take that risk, and they're going to help to keep the price up. And this is something that we see all the time in ETF markets, right? So when there's an ETF that's pegged to an index, it's not that the ETF is forced to trade with that index, but the arbitrage bot realizes that, hey, if the ETF, the thing that everyone's trading, is 0.5% away from the actual index value, that's an inefficiency that they can profit from. They can buy it at that price and sell it eventually, because the index is obviously worth that. So that's the same thing in regards to tether markets. A lot of this is arbitrage trading. And I think if it gets too far away from the mean, you're going to see arbitrage bots step in, unless there is really a dramatic enough sell-off. If you get this to 95 cents per dollar or 90 cents per dollar, and then I think if you get to that point, maybe it might be enough to really just, rather than kicking the can down the road, really knock down this whole system in regards to this pegged currency. So that's what I'm currently looking at right now. Just wanted to kind of cover that. I know some people have been noticing that, been hearing about this premium. Again, we don't really have much at the moment to really justify why this is happening. But I think those three concerns are, or at least those 3 points, are pretty valid. I think the last one, though, the last one there is probably the most realistic. All right, so going on here, now that we've talked about crypto markets, which are still relatively quiet, waiting for the key breakout, Gotta jump into traditional markets, and I gotta give a little bit of a kick on the traditional media, because how awesome it is that traditional media comes to step in. On October 14th, CNN Business comes out and states that the blackout period for buybacks might have been the cause for some of the turbulence we saw in markets. My lesson here, I have nothing to share that's new here. I will say, though, that look, like CNN or one other media outlet over another, guys, mainstream media is not going to keep you ahead of the game when it comes to these things. They report news after it's hit the books, in a sense. It's already hit the market. So you have to understand that. You have to do your own research. I'd say, again, if anything, Bloomberg's sometimes good in regards to some of the interviews they get, some of the things that they're looking into, and they really get a good international perspective. And what's nice is that I actually learned Bloomberg has a completely different style compared to other media corporations, whereas a lot of media corporations are trying to drive profit. The only thing Bloomberg cares about is selling the terminal that traders use. They're really expensive, but pretty much if you get a few, 100,000 users on the Bloomberg terminal, that's really their business model. They make tons of money off it. It's thousands a year. So it starts to add up. But in regards to this for CNN and mainstream media, guys, again, they're always going to come late to the curve. Thanks for telling us something we already know. So going on here, I want to go ahead and spend some time to talk about equities and, provide you guys with the strategy that I'm taking as an approach to equities, as obviously it's Sunday right now, so it's not trading. But I am planning for this upcoming week, and I am not going to stay away from equities if there is some serious opportunities on board. Now, if there is opportunities to, the long and short, I'm going to play them. But along with that as well, it's just a matter of there being enough volatility, a lot of opportunity to play in this market. And I'll go ahead and share with you guys my general kind of stance right now. If you look across the two major indices, the S&P 500 and the NASDAQ, and even the Dow Jones, these players are hanging by a thread. Really, the NASDAQ and the S&P are hanging right on the 200-day moving average if you look at the actual indices themselves rather than ETFs and all that kind of stuff. The fact of the matter is here is if we do not hold and close above the 200-day, on Monday, that is going to be very, very concerning for the tone and presence that's going to set on U.S. markets. If this comes back down and rolls over and passes below the lows here on October 11th, this is going to probably signal a very big flash crash, a very big sell-off in U.S. equities, because there is no line of support after that. You might be able to look back here and look at some key price levels, say maybe around 6,800 on the NASDAQ, whatever you want to try for. But I don't really see anything that would signal confidence to me, especially a break on the 200-day, because we have not seen that on the NASDAQ since back here on August of 2015. And that is very, very concerning. If we are not able to hold this and ignore this dip that we had the other day, that's going to be very concerning. But we don't know what U.S. futures are trading like right now. We'll have to see what things are doing pre-market tomorrow. I'll probably try to do a daily update, if not a live stream maybe, and we can watch the markets as they open up. However, general tone here is to be cautious. And there's also a lot of great trades you can play if it turns out to break down to the downside. You can play the VIX trades. You can play some of the short ETFs that are out there if you can't just simply short on your brokerage platform. But again, there's lots of opportunities. Play it both ways, guys. I want to go ahead and spend some time here to talk a little bit again about the thing that I've continued to reiterate over the past few weeks and really over the past 2 months, and that is the divergence between U.S. equities and emerging market equities. And this is a good example. This is the TASI, which is the major indicator for Saudi Arabia. This week, we saw one of the most dramatic drops in the index here, where literally within a matter of 2 days, the index had dropped all the way from 7,800 down to 7,000 points. So this was a pretty big drop in the market. Again, one of the largest ones we had seen in a short period of time, and really over the past few years in the Saudis index. Now, a lot of people were saying that this was tied towards political issues, that it's tied to all types of different things. Look, the fact of the matter is, guys, is that there's always going to be a combination of factors that cause these types of drops. But I think a lot of it has to do with the general tone in emerging markets. It's a perfect example, a mixture of concerns for commodity prices, debt cycles, currency crises, whatever it may be. Again, if we take a look across the board here, emerging markets have not been able to fare as well as U.S. markets over the past few years. Again, we haven't made new highs in the Saudi index. I think this is since back in 2014. Sorry, I thought it was 2013. But again, it's very important to understand that emerging markets are not on the same page as U.S. markets. And I thought it was really interesting, again, that the headlines, and even Bloomberg, for example, was saying that, Saudi markets are selling off because of, I think one of the individuals or a journalist that, currently right now, certain countries are debating on the livelihood that they're alive, and, are they being held captive, and whatever it may be. Guys, none of that has to do with these markets. These are multi-trillion-dollar markets, and they move off of very key things, whether it be breaks on technical support of price or through fundamental things that are going on behind the scenes. It's a matter of us trying to figure out what those things are so we can play ahead of the curve and make profitable trades in markets, and also get a good glimpse of what's going on the world stage, which I find really exciting. Anyways, that's it for the video, everyone. Thank you all so much for watching. I hope you all are having a wonderful day, as I stated before. Again, if you guys have any comments, questions, or concerns, please leave them down below. You guys know I like to ramble, so I'll be happy to try to answer them in the next video or in the comments down below. But until then, thank you all so much for watching, and I'll see you all in the next one. Stay tuned.